Hi guys, and welcome. Today I have Keith Holdt. Welcome, Keith.
Hi everyone, good to be here.
Keith is from Equity Impact Partners, and we're going to talk all things about investment. And there's a reason why, well, I guess Keith and I first met. We were both wondering where we'd met. We couldn't remember who had connected us, but I bet you it will be obvious when we get off this call. We'll go, oh yes, it was Juliet or whatever. We met in bank, and we had one of those conversations where it's like, oh yeah, we could do this. Really creative conversations. And it's a sort of conversation I don't expect to have with somebody with such a level of experience as you have. So why don't you tell us a little bit about your experience? And then what I really want to do is have one of those conversations where we talk about investment, and we can kind of bring in some of those pieces, because a lot of my clients, they are doing investment through debt, equity, various different means. And I want to just share, your expertise a little bit with them. So Keith, tell us a little bit about your background. Who are you? What do you do? What have you done in the past?
Yep. Thanks, Joe. And perhaps a good place to start would be good to go right back to the beginning. And I often tell the story of when I was 6 years old. And my grandfather had, one day when I was visiting over Christmas, decided to take me around the business he'd built from his garage into one of South Africa's biggest furnace manufacturers for the gold mining industry.
Wow.
And although I was only 6 years old, that was quite a big moment, and it was almost a moment of inspiration for me. As I kept wondering, and sort of as he showed me around, the thought kept going, how did he build a business from his garage into something so big? And this was quite awe-inspiring for me. And he shared the story, and there were a couple of things that came out of that, which I actually use to this day. One of them being one of my first questions to a CEO or a founder that I'm working with is, tell me about your business as if I'm a 6-year-old, because I know then that we're in a good starting point, and it's simple enough for people to get their heads around. Right. But that really inspired me to eventually want to sort of understand more about business, but not only do that, get my hands dirty in either doing it myself or working with other people to build businesses of great value and understand what all the key parts of that. So eventually I ended up studying industrial engineering, and from there I ended up sort of in systems engineering and management consulting. I was part of the team that rolled out one of South Africa's first mobile networks, MTN, and we launched some incredible, sort of a lot of the services that we take for granted today. So that was in the 1990s, before I eventually came over to the UK when I was working for IBM in their consulting group at the time. And had incredible experiences working around the world, sort of in on various projects. And from IBM, I was sort of asked to join a Swiss company that was growing internationally, and largely by acquisition in various sort of countries. And what appealed to me there was, having got my head around the nuts and bolts of the different how businesses needed to fit together and work. What appealed to me was getting my head around sort of the acquisition side. How do you grow a company? How do you take something that's a lot of disparate parts and meld them together so that they work together? And I had some amazing, I ended up being global head of sales and led some really large deals where I sort of found myself negotiating with pan-European teams, and it felt like a bit like Brexit, I suppose, where I had the Germans and the Italians and the Spanish all in the same room, and you're trying to get everybody to sort of speak from the same hymn sheet and come to an agreement, which was successful. But that was a great experience and sort of taught me so much as well. And from there, sort of, I was approached by LDC, a mid-market private equity company in London, and I worked for them for about 5 years. But again, that whole private equity world was something that I hadn't thought of before I joined them. It was like being thrown in the deep end, but all of a sudden we were doing about 20 transactions a year. So you're seeing a diverse range of businesses, all sorts of situations, each one with a different sort of approach to how they were going to build that value. Some were what we call buy and build, buying different companies. Others were, let's focus on how we grow organically. How do we maximize the value of this asset that is our business? And what funding do we need along the way? Because funding is always the critical. I see it almost like the blood supply of the business. Literally. And that needs to feed the animal and get you, and it helps you to achieve things. So I stayed in private equity for about 5 years, and then sort of at the end of 2016, left there, and I sort of thought, do I go into another private equity firm, or do I set up my own thing and work with a lot of different investors with all sorts of different companies from startup all the way through to mid-market and beyond? And just to go back, while I was at LDC, I had incredible opportunities. We did the Fever Tree deal. We did the NEC Group deal, which we bought for a few $100 million, and 2.5 years later sold for many hundreds of million more. And I had some incredible opportunities to work with those companies and work out just how we were going to build the value and get to a point that was going to realize the right sort of returns. But then with Equity Impact Partners, it's been an incredible experience. So since then, I've invested in a few companies. I've been in the trenches alongside the founders, sort of through ups and downs. COVID's been a massively interesting experience.
I bet.
And some key things come out. Sort of funding's crucial. Do you have enough cash to actually see you through the crisis? Do you have enough cash to fund growth and investment to support growth? And how are you going to grow? Are you targeting the right markets? Have you clarified and simplified your value proposition and what it is you do simply enough? And all of those sorts of things. And sort of not just investing in companies, but sitting on boards, getting asked by CEOs and founders to mentor them and advise them and all sorts of things like that. And increasingly along the way, I suppose in the last number of years, more often than not, it's not just, I'm not just there as the engineer trying to work with the company. And it's the funding question is crucial. And especially when you're building from a startup, and I often end up advising, like, when do you fund? What's the right time to fund? How much should you be asking for? Do you go for a big amount or a smaller amount, and all sorts of things? So there's a range of questions. And then the big question comes out, sort of when I put it in front of investors, one of the first questions they say to me is, what's the equity story? And is it strong enough? Because they want to back a good team. They want to know what the equity story is in terms of how they've got to where they are, and also what's the future one, how they're going to realize the investment, the value going forward, so that investor gets his return. So that's what I do on a day-to-day basis. I love what I do. I love working with businesses and business owners.
I love that phrase, equity story, because all of that is encompassed into that phrase. The story about what you've done, what you're going to do, who you are, what you do. I mean, it would be easy to say, what's the business plan? No, that's not what it is. It's a story. And it's a story that kind of, for me, that's what I love about working with, because you're kind of, I mean, you've worked with all sorts. I mean, you literally have worked the spectrum of the business realm. Where do you get the most juice? Like, what is your passion in the sorts of businesses that you're working with? Where do you feel like you add the most value, and you can give your best of what you do? Like, where does that sit on the spectrum? Size? I mean, it's not just size. I'm talking about kind of who you like to work with and how you like to work.
I think that's a great question, because I think first and foremost, I love working with the founders or the owners or the CEO almost on a one-to-one basis. And it gives me huge energy and juice to see them realizing their dreams and getting the fulfillment and doing, because, sometimes that sort of people say to me, I'm the CEO cornerman. And it's because the CEO is really like the boxer in the ring. He's the guy getting beaten up, or she's the person getting beaten up. She's the person that has to focus on winning the match or the rounds and getting there. And they take him. Whereas the cornerman's there to fix the cuts, to advise how to duck and dive and stay on your feet and get to the thing with an eye always on the belt at the end, the trophy, sort of when you've actually got to the pinnacle. And so I absolutely love working side by side with them through thick and thin, getting into the trenches, feeling the pain with them, but also being there with them to sort of do the toasts and drink the champagne when we've actually achieved it. I love sort of what I always say on my business card, I've got the 3 words: focus, pace, and discipline. And for me, those 3 words. So for me, if you said to me, what are the attributes or the characteristics of the top CEOs that I've worked with? Let's say they're very focused, they're very disciplined, and they're always moving. It doesn't matter fast or slow, they've got pace. And I often get CEOs saying to me, Keith, can we come and join you for a steak and a bottle of red wine? And some of the biggest impacts of that sort of from the interactions I've had are from a dinner over a bottle of red wine. Yes, the plans are important and the details important, but those moments of inspiration, I love working with business leaders and owners and founders, and it just gives me a lot of joy and sort of to watch, okay, we've done this, we've done that. I've worked with him to stay focused, to stay disciplined. It's like having a personal trainer. I don't have a personal trainer because I don't know what workouts to do. I've got a personal trainer because of the accountability, and that's what I do with them and work alongside them.
So it sounds to me like you're not just creating and supporting with the equity story, but there's a coaching element in there as well. Like I can see kind of the guy who's in the corner in the ring is like massaging and fixing in the ring, but out of the ring is also usually the trainer and the person going, right, okay, let's work with this. I get that with you as well, because we've worked with mutual clients and I see the enthusiasm and like, hey, this is what we're going to do and this is where we're going to go. And I see that you see the vision, and I think that's what certainly the people I know that have worked with you, it's about you being able to see the vision and being able to see how to get there, which as somebody myself, and I really want to get into the nitty-gritty actually, because clients I have look for investment, but we've looked at looking for investment. So I kind of know, this is the beauty of the clients that I work with, is that I go along the same journey with them. We're working on the same trajectory. So when you're people, how do I say this? I think the problem often people find is everything's going too slow. The feeling is that it will go a lot faster if you've got a lot more cash in the bank. The problem is, I know we've had cash in the bank and we've still made the wrong decisions on investments or things to do. And even though I know certainly within my business, I'm making conscious decisions. I'm sitting down saying, okay, because I'm a planner, I like to have my spreadsheet there and say, what are we going to spend money on? But it's very easy when you're in the ring to not make those conscious decisions, to not make the right decision, or not to do it with the right information. Because I like to think I'm quite experienced. I know business, I'm in with business, I get my hands dirty, but I see it from a different perspective. Whereas you, it sounds like you've kind of got every perspective. You've been up here, you've been sales. I mean, the fact you've been sales and an exec blows my mind, really, to be honest, real portfolio career. What do you find when people are certainly businesses that have been, they've been at a steady pace for a while, kind of slow growth? What is the thing that makes you go, they definitely need investment at this point? Or what is the point at which people go, I need investment?
If I take a step back, I was having this conversation with somebody in the last few days with a company based in Switzerland, and we were talking about an investment round, and they were saying we need so much investment. I said, okay, first, why do you need that investment? I said, if you had got no investment, when would your cash run out? And so they said, well, it would run out in August, but only if we didn't land these 2 deals that are close to closure. So I said, okay, so you're actually covering your risk then, rather than, I said, what do you want to use that investment for? And it's largely working capital to support. So, okay, well, if we could avoid getting that investment, it would be better for you because you wouldn't be giving away equity, which means your current owners have more. So stop thinking, and why do you say you need X amount? so we were having that conversation. I said, okay, so we established a few points there. And then I said, where you say you want to exit in 3 to 5 years, what valuation do you want to have as your minimum valuation at exit? And I always talk about the destination. And to me, I use a framework which I've used since private equity of the captain's voyage. So what's your cargo? What's your ship? Is it seaworthy? What's your destination? We could go into that in a whole lot of detail, but in terms of answering the question, then they said, well, we want to be valued at Y. Let's say, for argument's sake, 50 million euros or whatever the case is. And I said, okay, work back from that to where you are now. What do you need to achieve to hit that valuation? What do you need to change in terms of the software platform you've got? What investment do you need? Could you do it all off the sort of the income you get from your sales? Because that starts to help you define how much investment you need and when you need it. If you said, well,
someone once said to me, the best investment you can ever get is more sales.
Exactly right.
Increase your sales.
The customer funded business. There's a book on that I remember reading, but I think the author is John Mullins, but I might be mistaken, but I agree. The customer funded business is the best business. You keep your equity, you keep your value in the business and so on, but it's not always possible to do that. So, but I find too often people haven't really thought through how much do they need and do you need it all now? Because if I say, well, I need 5 million over the next 5 years and I want it all now, you're going to give away a lot of equity than if you said, well, I can fund it through 500,000 now and 2 million later on, and then I might not need the rest because my sales might be up. The argument in reverse is to say, well, and when you go in looking for funding, it's quite distracting for a management team, and often that hits the sales. So you've got to take those sorts of things into account and say, not just how and when and that, but how do you manage that so that it minimizes the impact on your sort of you running the business on a day-to-day basis?
It's a full-time job. I mean, when I work with clients that are either looking for investment, it's a full-time job and it's never ending in my experience. It's almost like you think that you're going to close around at a period of time. Either that, leaks on to another period of time, it doesn't quite, or there's people that don't quite finish the round and they get added in. There are always this kind of bespoke elements that end up coming into that first round. And then next thing you know it, you're into the second round and it's constant. It's almost like that has to be the priority of a CEO. And therefore, which makes me then go to, that's the priority and that's the full-time job of the CEO, to bring in the investment and constantly bring in funds. Then they have to have the structure in place to enable that, right? And do you help with the seeking of investment? Do you help with those conversations? Do you kind of act a little bit like the investment sales team at the front end, or are you strategic and you say this is where you need to go? All right, here you go off.
I'd say sometimes I'll do the latter, but only when I've worked with them to shape what the story is. And I've really drilled down, and sort of in years gone by, people would send me their investment decks and say, can I introduce them? And I would say, okay, maybe this person or that person. Now when people are asking me, can I do, and I don't say I'm a corporate finance advisor because I'm not. What I will do is support them in helping them prepare for investment. And then I have an extensive investor network and I know pretty well what those investors are looking for. So as I'm working with them, my first question is, if I'm the investor, would I invest in this company? Because the only way I'm going to introduce it to my network is if they can convince me that they're investable as if I'm the investor. And in doing that, I've rewritten investment decks before because I know how to pitch it. When you walk in for the first time, you don't have a lot of time to convince them that this is a good deal to invest in. So I shape that story. I really, really drill into, and we can talk more about the equity story, which is almost the past equity story, which is what have they done to create value so far? And it's not just, well, we started the company in this year and we did this thing. I want to know, who was it? Because the people are the difference in the business.
Right.
You can have two identical businesses and the difference will almost always be the people. And so I want to know who did it. If there were people that left, why did they leave from the founding team? And if it's a long established business, I want to know, how did they grow that value? Who was the driver? Who was the inspiration? Who gave the direction? And get into that, and sort of exactly what they did. How did they manage their cash? How did they manage their finances? Because an incoming investor, if I'm going to pitch it, I need to be able to say to them, because I know them personally, I've really looked into this and I feel it's a good thing. This is their story. This is why I think they're backable. This is why I think it's a good deal. And then I help them shape, well, how are they going to continue to create value over the next few years if that investor and we do the same thing. And I've sat in front of investors before, having thought that I had a backable business, and they just said to me, Keith, we don't think this has got a good equity story. We're not convinced by how they're going to create value. And by the way, we're not convinced by the team that's behind it, because the mantra of investors is always buy low, good management team, sell high. And there's a reason for that, is because it's the people you're trusting to actually deliver on that thing. Yeah.
Tell me then, let's talk equity story, because I know there are going to be plenty of people out there who maybe at the early stages, I'll tell you the sorts of people that often we deal with. These are people who want to grow quickly. So they want to grow very quickly, and they think that by bringing in the investment, that's what's going to help them grow quickly. Or software companies where you have to put the investment in order to create the product before anything can happen, and then there's obviously growth off the back of that. Are those different equity stories, and how does a business create their equity story?
I think that, the equity story is what it is. It's the story of how you create value, or how you plan to create value. And businesses do differ, like you mentioned, the software business. And often it's investment into the platform, it's investment into, and their part of the equity story is, how have you built the platform so far? And what are you planning to do for the future in terms of the product development roadmap? And the product development roadmap itself has value. And there's a sort of a story. I remember hearing a talk once on the Skype story, where I think, if I remember correctly, eBay bought it early on. It lost value. They bought it for a couple of billion. And then a private equity firm bought it out from them. And the one thing they focused was on the product development roadmap. And they got that ship shape. They delivered on time. And then Microsoft came and bought Skype from them, literally not that long after, for many billions more. But that's just an example of what, like, the product development roadmap of a software company being a key part of the equity story. Both how have you developed it so far? How much traction have you got on it? How much interest? What's the market need? Has it been validated? And what are you going to do to continue to do that? But the software, like you correctly said, you've often got to put money into it to actually both not just develop the platform, but to market it and get it out there. But it depends a lot on whether, you can ask the question, is it focused on the consumer market? Is it a B2B software platform? Because there's different approaches you take. Now, you're right to say a lot of people, they want to grow as fast as possible. But you've got to look at the context that they're operating in, what they've actually got, whether their proposition is valid, what's the need they're addressing, how they're actually selling. And I talk about, in my ship analogy, what route are you taking to get to your destination? One guy could say, well, he's going to do corporate sales. Another one could say consumer. Those are different routes, or one might be online sales versus one might be door-to-door relationship based. And so all of those sorts of things, you need to take them all into. So I wouldn't say there's one recipe that works for all businesses. You've got to have a look at them, what they're trying to do, who they're trying to get to, and how they've planned to get there. And again, that feeds into what investment do they need to actually help to achieve that.
And that has to be a part of the equity story, because it's what the money is coming in there for. So the investors want to know, okay, where have you got to so far? What's hindered you to now? That's what I'm hearing you say. And then where is it that you want to go going forward? I mean, I find that the hardest thing. I think maybe because I'm a lawyer, maybe, and it's not naturally my way of thinking. But like, how do you know what marketing you're going to use? You're just going to use it, aren't you? And you've no idea how effective that's going to be. But you're going to do your best. And at what point do you stop? How much detail do you need to know, or can you just say, once we've got the money, we'll do a small amount and we'll test it, and if that doesn't work, then we move forward? Like, how much information do you need?
Yeah, I mean, it's interesting. I think, you need to be as detailed as you can, and often your assumptions underlying the financial model will be road tested in a lot of depth by investors and so on. But while you were talking there, the other part of that is actually what's your personal story? Because really investment is more about backing the people than backing the business. So in terms of your story, where did you come from? What did you do before what you're doing now? How did you come to the point where you decided to start this business? What are your drivers? I want to know that if I'm going to invest, I'm actually investing in you. That's how I feel.
Right.
And especially with younger business. So if somebody comes to me and say, we've got plans to grow our business by 10 times in the next 3 years, I'll be very, very skeptical and cynical until I've actually got to know the person. And I think, okay, and I want to see his plan for doing that, which is part of the equity story. I want to see what he's built so far, or she, in terms of, do I think they've got a model that works? Because some people will build something and it's not scalable.
Yeah.
Or it doesn't have relevance outside of the current market. Or there's a timing thing to say, well, it's relevant now. I mean, you could argue like electric cars coming in. So I might build a new diesel car now, but is it going to be relevant in 3 years' time or 5 years' time when electric cars are dominant?
But yeah, 3 years' time, maybe more, maybe closer to that.
But so a lot of it is to do with how convinced I am in you. And if I'm the investor coming in, especially if I'm an active investor, like I like to come in and work alongside you, are you somebody that I can work with?
That's got to be critical, hasn't it?
Absolutely.
Do I actually want to work with you is a big question.
But also, I mean, the other side, which we haven't really touched on, and it's only because I've been having this conversation with somebody in the last few days that it's come to the fore again, is when you are looking for investment, a lot of people will take the first person that comes along that says, yep, I'll invest in you.
Right.
I always say, when you're getting an investor, it's like getting a life partner. You choose carefully and wisely. If you don't feel comfortable, you don't feel that investor is going to be the right fit and so on, then think carefully about whether you don't just carry on sort of the fun. But finding the right investment is important.
Sorry to talk over you, but one thing I say to people, do a dating plan for investors. And that might sound extreme, but for me, it's if I'm going on dates and I'm going to meet these people, I want to know what it is that I could see me working with them, because I see it's very easy to if you take people at face value. So people say, oh, I've got £1 million worth. I've got an offer for £1 million. I say, congratulations. Now let's find out what that deal really means, because until you see the contract, it doesn't mean anything that they're going to offer you £1 million. I can offer you £1 million even for the same amount of percentage, but if I've got 100% of control of your business, or maybe not 100%, but if I've got total control over what you're doing, it changes the dynamic. And some people need that. Some people want that. Some people are okay with that, but you have to understand that it's not just about the number of shares and the number of pounds or dollars or euros. There's more to it than that. It's the discussion. Once you see then the term sheet, even then there's a level of detail in that term sheet. You can see, they're going to look at that, but the devil's in the detail for the investment. And you only really get to know people. It almost feels for me like you only get to know the investors when you've already spent a lot of time with them, and that might just be negotiating a deal. So you get to really understand, just the same as when you're selling or buying a business, you really get to understand the seller or the buyer and what their real true values are when you're negotiating the deals. They may say, oh, we want to make this as easy as possible, and commercially they're going to be really commercial, but then they get a bee in their bonnet about one thing. So it takes time, doesn't it, to really understand the deal, understand who you're talking to. And I think you have to have a clear vision in your mind about who you want on your team, because the investors
Absolutely.
are on your team.
I completely agree. And I'm thinking of a company that you and I both know that's been going through a funding round right now. And part of the conversation was exactly that. What sort of investors do we want on board? And it's been a hard slog to find investors, and the right sorts of investors that will not just put money in, but will actually add value and bring things that sort of almost skills and expertise that we don't necessarily have. So I completely agree with
that. Contacts or sales, or so they're adding more value than they're receiving, or because some people want hands-on investors, some people want completely hands-off investors, and they want them to stay well away. So it's interesting. We were talking just before about structuring investment, and I want to just bring that into the conversation, because one of the things I was when we've got clients who are raising 60 million over a period of time, and they're doing it through a mixture of different ventures. They might do some debt, loan agreements, you might do some warrants, some equity, different elements, different ways of raising funds. And I don't know whether this is the lawyer in me, but I like consistency. I like the structure. I like the simplicity of allowing somebody to come in and buy at that rate. However, each investor will have its own little stamp of what they want or what they expect. So what you think will be consistent ends up not being consistent. And when we just spoke earlier, you said it's not the way to do it. I'd love your thoughts on how to structure those deals so that you don't, and actually say that. On the other side, and it's a fabulous woman who is raising investment, and she said, I'm only giving away 10% and nobody's going to negotiate with me. And it's like these two different pieces, two ends of a spectrum. It's like, sure, we'll negotiate with you, but we're going, because we're raising so much, and I'm not negotiating. I'm sticking to that. What's your thought? What are your thoughts on that?
Okay, and I think both of those are really good examples. One of the biggest mistakes people looking for investment make is they almost go into the investor's office cap in hand, as if they're desperate for the funds.
Right.
And so the investor says, I don't like those terms. These are the only terms I'll accept if you want my money. And too many people, I think, just bow to that and say, okay, fine, we'll make a plan because we want your money. The best thing an investor, somebody looking for investment can do, they need to almost get themselves in a mindset. Sometimes I say, you need to meditate or something before you go in, and get yourself into this mindset that you have something of value. That investor is looking for a place to put their money that they believe will be a good home for it and that will give them a good return. If you say, what's the outcome they actually want? They want to know that if they put £10 in, they're going to get 100 back or whatever. So you've got to go in there as an equal, not as somebody that is desperate for their money. And say, this is really valuable. You have to believe in what you're putting. You've got to believe in your business. And you've got to say, it's actually a privilege for me to be offering you this opportunity for you to put your money. You've almost got to have that without being egotistical, but you've got to have that confidence to say, this is an opportunity for you. These are my terms. Now, it's not to say you'll be totally inflexible, but on the whole, that's a huge failing, I think, of a lot of people that look for investing. Whether they are a fund or a business, it doesn't matter. And again, the equity story comes into that, because the stronger the equity story, let's say you're a fund, for example, if you've got a demonstrable track record of giving your investors good returns, then why should you change your terms for every single investor that comes along? It's all about positioning. It is always all about positioning. You take the other lady that you mentioned, clearly she's confident about what she's got.
Very.
She is doing the investor a favor, not the other way around. Now, there are a lot of investors out there who have got big egos, and but there's many brilliant ones, but they've got the pot of money, and they like to be in that position because then they can sort of get the terms they're looking for, and they can negotiate hard and everything else. But the best deals are the ones where you go in as equals. You say, right, I'm giving you an opportunity to put your money in a place where I'm committing to give you a good return, and I will work to get that return for you. That's a good position to be in. And sort of, you can argue about whether all are like that, but that's certainly the attitude that you need to go in, because you need to get on the same page, or sort of equal players. On the other side, if you've got that, should you buckle to everybody? Maybe for the first one, you'd be flexible, but when there's 10 potential investors, no. I think you say, these are my terms. If you want to get on board, this is your opportunity.
I will share this with you, actually, mostly because I just love the bolshiness of it. And this lady that we were talking to about investment, she actually holds court. That's what I call it. She doesn't call it that. She holds court. So she invites 10, 12 investors to a meeting where they all get on a Zoom call, and she pitches, they get to ask questions. And then off the back of that, they can say whether they're interested or not. For me, what that naturally does is creates that level of competition, because other people are thinking, they're doing it. And I think that's a remarkably smart thing to do. It may be, obviously, you've got to be very sure with your story, of course, and you've got to be very sure with your numbers. But for me, that level of confidence, it's very interesting, because I talked, obviously, my job is to negotiate these sorts of deals. And we are always working for the company, rarely working for the investor. We're always working for the company. And it's very much, we're guided by who the CEO is, or who that person is, and how they say, if they say to us, we need that, it's often my view, okay, what's the worst that's going to happen if you don't do this? Because unless, it's like with anything with money, unless you come to it with a perspective of being full, not having a lack. And that's a hard thing to do. I know one of my business mentors always says to me, you raise investment when you don't need investment. Because exactly. You want to feel full. You don't want to feel like, but we've got 2 months left. And that mindset is very much a part of the discussions that you have to have, because wherever you come in that mindset, like I need you, or I really want this, or this, I'm desperate for this, that will mean that you may be over flexible. You don't want to be too harsh, but my feeling is when you're a business owner, you can't be too harsh. You can't have too strong a view of saying, no, we deserve this, because that's what your advisors are there for, saying, look, you might want to on this one, you can negotiate this. That's the point, isn't it? You can have a very firm belief in yourself. So yeah, it's very much about the founder's belief in what that money means to them and what they can do with that. And that becomes part of the story as well, because it's not just about the story you're telling to the investors, about the story that I'm telling myself about the
100%.
How do you help people with their stories and getting their story together?
I mean, I start by digging into what the current story is. How did they get to where you got? And I think, just linked to what you just said, I think you need to start by being confident in your own story. And a lot of people haven't even thought about the fact that actually they're creating a story as they go along. and the more people are aware early on that actually they're busy crafting a story that if they want to get investors on board, investors need to believe it. But actually, that lady you mentioned, I think that's great. I can almost picture her there, because clearly she
with a crowd.
Yeah, even from what you said, I'm getting confidence in her story, because she's clearly confident. She's confident enough to hold court. She's confident enough to say, this is what I want, and I'll choose you, but not you. It's almost like Dragon's Den in reverse.
That's exactly how I see it.
And to me, that's already giving me confidence. So actually, I like this. I want somebody like that building a business. Without even knowing, I think, I'd like to find out more about that and see if it's what the opportunity is. But so as people, so I start by really getting to know the person, getting to know the people in the leadership team, understanding that's how they've built the business so far, understanding how they've dealt with challenges or things like COVID. I think one of the things about COVID, which will be quite interesting, is all of a sudden you've got one global event that's confronted almost every business and every person. And so I want to know, I'll say to them, and it might sound like just a nice bit of chat, how did you cope with COVID?
It's been an equalizer.
Yeah, and every business will have a different thing. I've worked with 4 or 5 businesses over COVID. The approach of each one has been entirely different. Some have scraped through, but they've all survived. Others have used the opportunity to completely transform their business model.
Quadruple their business, 10 times their business. Some people,
And so I want to know that. So what did you do? And so if somebody says to me, well, we found ourselves standing at the edge of a cliff, we could have either just shut up shop, but instead we decided to do this, and it's been tough, and we've had to convince people from a startup position all over again. But actually, this is where we are, and this is what we've done. Then I'm thinking, you know what? You've shown resilience there. You've shown adaptability. You've shown focus. You've shown that actually, if you're the ship, you're not so scared of what's the iceberg or the storm that's out there, that you've actually set sail from the harbor regardless, and what have you. So that's my starting point, is get to know them as people. I want to know them, because it is all about the people. I want to know, like, how do they operate? How do they operate in a challenge? And what have they done so far? And from there, then I want to know, and what's their dream? What's their purpose? Sort of, where do they want to take this business? Not the numbers first off. I want to know, like, how do they want to change the world? It's sort of all of those. What's the real driver?
Big picture,
if somebody says to me, if somebody just says, well, I want to be a millionaire and have 10 million. That's not a real driver, because I know that sort of it never is. When they say to me, and a lot of people haven't even thought about it so much, but if they say, I want to do this and really change this, and that drives me, that gets me out of bed in the morning, that's the juice. And I say, okay, now I know that regardless.
You're going to laugh. I've got to introduce you now. I feel like you're going to.
And the reason for that is because you know that tomorrow they might wake up and all the money might be gone.
Mm-hmm.
But and are they still going to be there? How are they going to cope with that?
Absolutely. Well, look, Keith, thank you so much. I love these conversations, because I can already feel, that tingle in your fingers when you're like, oh, I feel a bit inspired. This Friday, I feel inspired. And I love these conversations, particularly about the big picture stuff. And you've got your WhatsApp at the bottom, email there. People can get in contact with you if they want to talk equity stories. When should they get in contact? Before they're looking for investment? Presumably before. If they're in the middle of a round, is it worthwhile them connecting with you as well?
Yeah, any time, and I mean, it varies. So obviously, if they only think they'll need investment in a year's time or two, that's a good place to be, because I can start early on and say, okay, if you want to shape yourself for then, so that your equity story and all of these things are in place, let's start working early. Equally, if they need investment now, what are they doing? Are they missing a trick? All of those things. Or even I'm sort of just talking to a guy now who's actually based in the States, who's keen just for that sounding board type role. Am I doing the right thing? What should I be, and that sort of, should I be ducking and diving, or I've just been knocked out? So those sorts of things, it isn't a time where I think there are clearly benefits to sooner rather than later to say, let's map out the plan for on a sort of short to medium term basis. But equally, if you're right there, key questions: am I doing the right thing talking to this investor? What should I be doing? Am I asking for too much or too little? Happy to get into those conversations as well.
I love it. And I think we're going to look out for, we're going to do some, maybe some training or some joint elements around investment and kind of giving people some tools. So we'll see how that pans out. We're going to spend a bit of brainstorm time, aren't we, Keith? Thank you, everybody, for coming and watching. I hope you've gained some understanding around equity stories, investment. And if you want more information around investment, get in touch with Keith. He's just a good guy. Frankly, he's good. He's good at giving you that inspiration and that kind of tingling that makes you think, oh, yes, this is all possible. So yeah, highly recommend you connecting with him. Keith, thank you so much for spending your morning with me, answering questions around equity stories and explaining to me how that piece, because I'm not the commercial piece, I see it, I see it at the point at which the deal is in motion. I don't usually see that piece before. So it's great to hear how that happens. And I look forward to seeing you soon. Thank you, everybody, for joining. Do subscribe if you want to hear more business stories, more about equity, investment, and see you again soon. Bye.
Thanks very much, Joe, and thanks, everybody. It's been great to be on.